Let's bring in Jason Goldberg, who covers the U.S. large cap banks at Barclays. Jason, what do you expect?
Yeah, no, it should be an interesting quarter coming out with all these big banks on Friday the 13th. But bottom line, we expect record net interest income performance, aided by both loan growth and net interest margin expansion as the banks benefit from all the rate hikes we've seen. Some of that will likely be overshadowed by some softness in fee income. You alluded to weak investment banking fees, but we do expect pretty solid trading results, higher expenses, which is typically seasonal for the fourth quarter. And while loan losses, we think, will remain near historic lows, as you alluded to, we do expect banks to continue to build loan loss reserves, to get ahead of potential economic slowdown that many anticipate for 2023.
Which one's best positioned? Who do you like?
Yeah, I mean, among the biggest banks, coming in tomorrow, we think, JPMorgan's, well positioned. I think two of the knocks on the stock in 2022 were higher than expected expenses and some capital pressures. And we think about 2023, we think there'll be a tighter rein on expenses. We still think they'll benefit from the full year impact of, this year of 2022's rate hikes. And we do foresee them building capital throughout the year.
Mike, that's a bullish case generally on the environment we're in right now. On the other hand, people have been worried about net interest margins peaking, loan growth slowing, a worsening economy. How are the banks set up?
Well, I don't think there's particularly high expectations for the near-term numbers, but there is an overhang of just people not being convinced that we can avoid a recession and therefore deterioration in credit conditions. So I don't think it's necessarily people looking for a particular adverse surprise in the numbers we're going to get here. It's really about until there's more certainty that the economy is going to muddle through, the banks are properly reserved, then I think maybe it just becomes hard to put a much higher valuation on some of the stocks, but it doesn't mean that they're not operating well. And if I just look at in aggregate, the KBW Banks Index, I think it's just trading at like book value, as a whole, and that's about the average of the last 5-10 years. So it's not as if they've been washed out, but clearly not also being counted on to deliver some stellar numbers.
Jason, do you expect earnings growth across the banking sector this year, even in the face of a slowdown or possible recession?
We do. We think as we think about 2023, we do think the group will grow earnings. I think partly because they built reserves in 2022, which should help them in 2023. But you enter kind of this uncertain backdrop, from a position of strength, right? So, pre-provision net revenue, was a record in the third quarter. We think will be a record in the fourth quarter and potentially another record into the first quarter. At the same time, revenue growth is exceeding expense growth. And while loan losses will highly increase as the economy slows, they're rising off of 50-year lows. And the industry has, pretty strong capital and liquidity. So we do think they can grow in 2023, despite the fact that the economy will most undoubtedly slow.
Jason, thank you for helping us pregame the bank earnings. Jason Goldberg.